Good afternoon and welcome to the 90th United Cooperative Annual Meeting. It has been determined that a quorum is present, therefore I call this meeting to order. Secretary Robin Craker will read the notice of meeting and the minutes of last year's meeting.
Minutes for the 89th annual meeting, April 24th, 2025. The 89th annual meeting of United Cooperative is called to order by Chairman Howard Bowl at 1 p.m. at the Watermark in Beaver Dam. It was determined that the quorum was present. Secretary Robin Craker read the notice of the meeting and the minutes of last year's meeting. With no corrections, the minutes stood approved as read. Chairman Bowl gave his report and introduced the board of directors. President Kramer reported the annual report of the balance sheet and statement of operations for 2024. President Kramer reported total sales of $1,186,792,954, a net margin of $99,540,625, total assets of $1,160,591,922, patron equities of $760,033,699, and cash returned to members of $56,888,000. A motion and second came to the floor to approve the financial report. The motion carried. Vice Chairman Gary Nolden gave the nomination committee report and announced the election results. Members of the nominating committee were Jay Mamastik, Jim Van Erum, and Adam Rademacher. Re-elected to the board were directors Brad Krieger and Dwayne Hinchley. Newly elected to the board was Travis Morris. Vice Chairman Nolden thanked outgoing Director Howard Bowl for years of service and welcomed Travis Morris to the board. Old business, none. New business, none. Chairman Bowl made his closing remarks and noted that the meeting had been recorded and would be available for review via the website. A motion and second came from the floor to adjourn the meeting. Motion carried.
Are there any additions or corrections to the minutes? Hearing none, they will stand approved as read. We started our soybean processing facility in Waupun, which everything seems to be going smoothly, and it would be a great benefit to our cooperative through the feed department and through the grain division. Most recently, we had another large transaction. We were able to purchase the Southern Agronomy Region assets from Alcivia Cooperative. So it'll be exciting going forward to see what we can do to grow that business and welcome our new patron customers in that area. I would like to introduce our board members at this time. Myself, I am chairman. I'm Gary Nolden from Prairie du Sac. Robin Craker, our secretary from Reedsburg area. We have Dwayne Hinchley from Cambridge. We have Peter Melsna from the Hillsborough area. We have Travis Morse from the Wisconsin Dells area. We have Luke Bergman from the Greenville area. We have Vice Chairman Brad Krieger from the Shawano area. I'd also like to thank Rodney Liederman, our director from Denmark, who is retiring after this meeting. Thank you for all your years of service. It's been a great asset to our board, and we wish you well in all your future endeavors. At this time, I'd like to ask President and CEO David Kramer for his report.
Thanks, Gary. We'll be going through the balance sheet, statement of operations, and some graphs. We'll start with the balance sheet. As Gary said, we had a very, very good year again. Not a lot of changes in the balance sheet. I'll just briefly go through some of the major changes that have occurred. I'll start with the current assets. Current assets are $538 million compared to $483 million last year, so you can see they're up substantially, up $55 million from a year ago. Our inventories are, make the most part, majority of that. The inventories are $403 million versus $353 million, up about $50 million. Our prepaid expenses are almost $48 million versus $37 million, up a little over $10 million. And then we have income tax refundables. They're down slightly this year from where they were last year, 5.6 versus 14.1 million last year, down about $8.5 million. So you can see those are the majority changes in the current assets. Investments and others, total investments and others are up just slightly, $299 million versus $295 million, up about $4 million. Property equipment, there's some changes there. Obviously, you know, there's been a lot of building going on in the last 3 years. As Gary said, we've completed a lot of that stuff, finished it up this last year. soy processing being the biggest item. We're at $724 million worth of property equipment versus 674 a year ago. Then we have accumulated depreciation, so our net property equipment is $402 million versus $381 million, up about $20 million from the previous year. Total assets then are $1,240 million versus $1,160 million a year ago, or up $80 million from the previous year. Nice increase there in assets. Our liabilities, total current liabilities are up just slightly, $348 million versus $313 million, up about $35 million. The biggest item that's up is our short-term debt. At the end of the year, we were at $53 million in short-term debt versus $9.4 million a year ago, up about $41 million. That makes the majority of the change there. And obviously, another important portion there is patronage refunds payable in cash. When we get into our financial department, you'll see that the financial is a little better this year than last year. We're actually going to be paying out $29,323,000 in cash versus $24,327,000 a year ago, about $5 million from the prior year, which is fantastic. When we get into our overall long-term liabilities, see our long-term debt less the current maturity above $56 million versus $72.8 million, down about $16 million, and that's our payments on an annual basis. Our long-term liability is $71,904,000 versus $87,020,000. Is down $15 million, or approximately what our annual payments are. Total liabilities then are $420 million versus $400,558,000, so up about $20 million of liability. Patron equities, the preferred equities, this is the preferred stock that members have invested in the company, $239 million versus $224 million. That's up $15 million from a year ago. This past year, the board paid 5.5% dividend at the end of the year to those equity members. Our general reserve is also up slightly, or very nicely. It's $395 million versus $360 million. Our general reserve is up $35 million from the previous year, which is fantastic. Total patron equities, $820 million versus $760 million, up $60 million. Liabilities and equities, $1,240,000 versus $1,160,000, up $80 million for total liabilities and equities. Operating statement, you'll see our asset breakdown. The three big categories for our assets are our inventories are $403 million, up 32.49%. Property equipment is $402 million, up is 32.45%, and investments $294 million, up 23.77%, so that makes the majority of our assets. In our investments, a lot of that is our ethanol investments in other ethanol plants. Patron equities, $820 million, up $60 million from a year ago. Total assets, $1,240 million, up $80 million from a year ago. Our liability and patron equities, the breakdown of that, you can see our patron equities are 66.11% of all of our liabilities. Long-term, 5.8%, and the current liabilities are 28.09%. On the bottom of the page, you'll see there's a picture of our soy processing facility in Waupun and our grain facility, parts of our grain facility in Waupun. So, if you go to the next page of our operating statement, you'll see the statement of operations. As Gary said, our operations are very good. Our sales are up substantially. $1,257 million compared to $1,186 million a year ago, up $70 million from a year ago. And that's with commodity prices being reduced. So the volumes are up a lot stronger, and that we'll go through those right after we get done with the statement of operations. So gross margins, $180 million versus $165 million, up $15 million from a year ago. Then we get into operating expenses. Our salaries and wages are the big one, $56 million versus $54 million, up $1.4 million. And Obviously, you know, last fall we had a lot of corn, had a big harvest, a lot of corn dryer expense. So we had 2.6 million of corn dryer expense versus 1.8, up about $800,000 in corn dryer expense because our harvest was so large. So our merchandising expenses then total were 73 million versus 72,600,000, up $540,000. So total administrative expenses are about the same from one year to the next, up slightly, 2,137,000 versus 2,040,000, so up just slightly, very equal, 17% of sales. So then we get into our general expenses, our depreciation and amortization. As we go through these building projects, our depreciation has increased, will increase through the balance of this year slightly. You can see we got 44 million of depreciation and amortization versus 37 million a year ago, up about $7 million from where we were a year ago. Total general expenses then are 52,844,000 versus 45,153,000, up about $7.7 million. Those were the major changes there. You can see our property taxes are up slightly, insurance is up slightly also, so those were the major changes there. Interest and other expenses, and we have gain on removal of property and equipment. We sold some assets this past year, had a gain of 3.8 million. The year before we had 3.5 million gain on sale of assets and equipment. Another change there is our other revenue, 10,921,000 versus 12,568,000, down a couple $1 million. Basically, this is interest that we are earning through our excess funds, and we're also being paid a dividend, an interest dividend from the Mesita ethanol plant, or financing of that plant. Total interest and other expense then, or income, it's got brackets, so it's income, 13,858,000 versus 15,452,000. It's actually down about $1.6 million from where it was a year ago because of the other revenue number being a little less. Total operating expenses then are 114 million versus 104 million, up about $10 million, which is not bad compared to having a $70 million increase in sales. Local net margin, 66,467,000 versus 61,426,000, up $5 million. Then we have our income from affiliates. This is our income from our ethanol investments and ownerships. 38,617,000 this year versus 36,452,000, 3.07% of sales, up about $2 million from a year ago. So they had a nice recovery at the end of the year, as people were probably aware of during the first half of the year. Ethanol margins were in the dumpster, and the last 6 months really came on. The last 4 months actually came on and made up all the slack that we had the first 8 months. Package received. Refunds received, you can see this is not all cash, but it's counted 6.8 million versus 9.9 million, down a little over $3 million from a year ago. So net income before taxes then, 111,857,000 versus 107,770,000, up $4 million. And we have income tax, 9.3 million versus 8.3, that's up about $1 million. Net margins then are 102,576 versus 99,507. This is net margin after tax, so an increase of about $3 million there. Package rates for this year on farm supply products is going to be 8%. 50% of that will be in cash, so 4% cash and 4% equity. Then we have our grain patronage is 6 cents per bushel on all bushels of any commodity that we purchase from our growers. And it's 2 cents for any product that was delivered directly into our processing plants by producers. We have 10% of all services. This is drying and storage will be paid back, and the patronage also, which is 50% of all this is cash. So a very, very solid year. You go to the next page, you have a breakdown of our sales. You can see the three major components for our sales are grain and trucking is 45.56%, agronomy is 23.48%, and feed is 27.62%. And not to be resist, our fourth division is energy. It's about 4.2% of our overall sales. So. And there we have a picture of our total upon campus, including our feed mill operations, our grain operations, and our soy processing. Very nice photo of that. Then we get into the volumes, and we talk about dollars, and we talk about volumes. You can see our volume numbers are very good. Feed in tons, these are concentrate tons, 555,000 tons, up 65,000 tons from a year ago. So our feed business has been growing very, very rapidly with the addition of the new mill. Grain, this is our bushels. This is bushels sold, 107 million bushels sold, up 7 million bushels from a year ago. And I think if you remember back last year, we talked about the additional storage and stuff that we had added for the year, a new site in Center Valley and some additional storage at other sites. And even with all that last fall, we still had huge grain piles at 4 locations. So. Fertilizer volume, and this is in tons. You can see there we went from 314,000 tons to 337,000 tons, or an increase of 23,000 tons from 2025. And there again, we anticipate that tonnage will grow dramatically with the acquisition of the Osivia fertilizer plants to the south and in plant in Marcus. Fuel volume, these are in gallons. These are in millions of gallons. 22.3 million gallons of fuel. This includes propane and refined fuels. You can see it jumped from 21.17, so we had a growth there of about 1 million gallons in fuel, even with selling off some of our convenience store assets. So decent growth there also. So everything was working very well, and our sales teams have been doing good, and our employees apparently have been taking care of our customers to everybody's credit, doing a good job. We continue to grow. The next page, we've got some 5-year histories. I guess the first one that's impressive to me is if you look at our 5-year history of income, you see the last 4 years we've had over close to $100 million of income. We had over $100 million for 3 out of the 4 years. One was 99.5. The average for the last 4 years for the company is $105 million of income, which is fantastic. So a lot of companies are struggling. Ours continues to produce and perform very well. We've got our annual sales. You can see our annual sales there are up from they were last year, down from what they were in 22 and 23, but there again was commodity based. This is dollars. The price of grain has a big impact on that number for us. That's why we don't always talk about dollars, we talk about volume and units at every board meeting. So, return on equity, you can see our return on equity this year is 12.51%, last year was 13.1%, so it's right up there with the last 3 of the last 5 years, right around that 12.5% to 13% return on equity. And that's pretty good when you think about a business where you can invest any money and get 12 or 13% on year in and year out. The cash return to members, this is what people like to see. You can see there again, our 4-year average is $58,355,000 in the last 4-year average of return cash to members, which is phenomenal. Down below, we've got a picture of some of our equipment, which we are very proud of. We try to reinvest in our equipment as we need to keep our fleets in line. You can see we've got another picture of our first railroad engine that we have down at Boscobel. It's performing nicely for us. On the last page, we have our same format that we have every year. That what we take an average $100 sale from the company. What is the net? Where's the money go? It looks like you can see right the net margin on the bottom is $8.16 on average sale versus $8.38 last year. So our overall average per $100 is down just a smidge. If you review the annual report, you'll see we've completed a lot of projects. That some of these projects were three, some of them even 4 years to get total completion on. Time to get the beginning planning to get the blacktop and get everything finished and get them operating. So we did get a lot of projects completed. We've got a couple new projects starting this year. We've got a new fertilizer plant that's planned and will be going up this summer in Denmark. We have a new fertilizer plant planned that should be going up this summer in Marquezan. looking at some office complexes and some warehouse complexes. So we also have some properties that are gonna be sold. We have a C-store, our final C-store is under contract to be sold. We have some land and a few other things that will be sold, unused assets that the company has not planned into long-term use for the future. So with that, I guess I'd just like to say thank you to all of our customers, and appreciate all your support, and hopefully that we have a continued support through the future years, and I'm looking forward to having another great year again. The first quarter of this year has turned out very positive. It's actually ahead of where we were last year at this point in time, which is phenomenal. So thank you again.
This time, I'd like to ask for a motion to approve the financial report.
I so move.
Is there a second?
I'll second.
All those in favor, say aye.
Aye.
Opposed, same sign. Motion is carried. I'd like to call on Brad Krieger from the nominating committee report.
Nominating committee met on March 23rd, 2026. Members of the committee were Howard Bowl and John Stevenson. The nominating committee was unable to find any qualified members willing to run for the open board positions. With no one stepping forward to run, Gary Nolden and Peter Melsna ran unopposed. Results of the election are Gary Nolden and Peter Melsna are elected to a 3-year term.
Is there any other old business to be brought before the meeting at this time? Hearing none, we'll move on to new business. At this time, I'd like to call upon Robin Craker, our secretary, to read the amendments to bylaw.
Thank you, Gary. As authorized under bylaw 15 of the United Cooperative, the board is authorized to amend the bylaws from time to time as they see fit, as long as the results are reported at the annual meeting, and that's what I'm doing here. We worked with, this year we looked at bylaw 4, board of directors, section 2, number and qualifications of directors. Previously, the bylaws stipulated that it would be composed of 9 producer members. We changed that it would be composed of no less than 5 producer members. You give us a little more flexibility on board size and one thing or another. So if you looked at your official notice of the annual meeting, it goes into a little more detail about the change that we made. Like we say, we established no fewer than 5. Required at least 3 directors represent 3 districts, with the remaining directors that serve at large. Confirmed that the directors serve for 3-year terms. Clarified the procedures for filling vacancies, and then reinforced the eligibility requirements for the board. Minimum 50% of income derived from production agriculture, in compliance with the cooperative's credit policy. As part of that, since then we have voted to reduce the size of our board. We'll be going from 9 members down to 7. And that's my report on the bylaw change.
Thank you, Robin. Is there any other new business to be brought before this meeting at this time? No, hearing none. I'd like to continue by thanking our patron members, to those of you that watch this meeting online at a future date. As your continued support has continued to make this cooperative a great place to do business. And I'm also would like to thank all the employee group who, without them, we would not have a cooperative, without them serving us in all of their local communities. So thank you again for all of your dedication to this cooperative. At this time, I will ask for a motion to adjourn the meeting.
So move.
Is there a second?
Second.
All those in favor say aye.
Aye.
Opposed? Same sign. Meeting is adjourned. Thank you.